Hello and welcome to another update video about Solana. We are still tracking this ongoing correction up there. It's looking good. I mean, it's looking good for trend continuation potentially. Obviously, we cannot rule out that the price will break below the $21.60 level. But as long as that level is holding, the price can keep climbing, ideally in this trend channel that we put onto the chart yesterday, and ideally towards the $25.50 to $27 range. The $25.50 level is the previous swing high, and there's also a Fibonacci extension level as a target of wave 5 that points towards that level, and then roughly $27, that's the next swing high above. So this is sort of the broad range for circle wave 5 target, wave 5 of wave 1. However, to get there, ideally, the price needs to hold the $21.60 level. A sustained break below that level will make an evolving impulse less likely. It could still turn into a diagonal, but then it is an unreliable pattern, okay? We don't really want to trade diagonals, and we don't want to believe them. We can't believe them. We can't trust them. That's probably the better wording. So in this fifth wave to the upside, yeah, target range is pretty much clear. It's clear what we want to see, and also as explained in the last videos, this is one of the more interesting coins, and the correction could already be finished. So the ideal target for a fourth wave, obviously we count this as a fourth wave correction, the ideal target is the 38.2 retracement level. That's here at $22.30. That hasn't been reached yet. It's not an absolute need to get there, but it's ideal. So I will not rule out that we go down a little lower here, and that is forming maybe a WXY structure. It's just a different way of how this correction can unfold. We have basically 3 waves down complete, I would argue. So this could be an ABC. So wave 4 could be finished, but I haven't seen much evidence that it's starting to move up yet. So it could turn into a WXY and potentially testing the $22.30 level. I will highlight that in yellow as sort of just a different way how this can develop. But be aware that, I mean, that's not so important, really. It's important, really important to understand that the $21.60 level is important. And this could even turn into a triangle, like a small bullish flag, right? I put that onto the chart already with these dashed lines to indicate that we might even see a contracting triangle here. Essentially, it's showing us what we want to see. It's showing us impulsive price action to the upside and overlapping messy price action sideways or to the downside. That's exactly what we want to see in such a fourth wave. It can take a while. Fourth waves are designed to be boring. Essentially, what happened was we had the wave 2 correction, and I explained to you that this wave 4 should ideally be roughly the same length. And I think it's just one more day and we have the same length, 1 week. Maybe we'll start to see some movement soon, which would be in line with the trend channel, basically. Maybe it touches the trend line, goes up. At least I would be watching the ascending trend line of the trend channel, even though it's not a very well-defined trend line. But Elliott wave tells us that we can connect waves 1 and 3, the tops, and start at the wave 2 low to get an ideal turning point. Let's see. It's not super reliable. It's just a bit of a technique that we can use. And you can see that the wave 4 is pretty much nicely positioned, also with regards to proportions compared to the wave 2. So it's doing everything it needs to do. But without the bulls showing up, we will not get the fifth wave. So that's the next target, next objective for the bulls. We had on this chart an inverse head and shoulders pattern. Good to see that we reached those targets. We had the targets of around $24, $25. That was reached. That was not only the head and shoulders target to the upside, it was also the 1.618 extension target of the wave 1. So Fibonacci extension targets were reached, and the, let's say, traditional pattern target was reached as well. Now we can also see, looking at the bigger picture now, this larger inverse head and shoulders here on the chart. So one more high could complete wave 1, maybe touching that neckline at $25.50. The following wave 2 pullback, which should be a corrective pullback if we get 5 waves up, could form the right shoulder with a breakout to the upside, and it could send us into the $35 region. And the $35 region is not, again, it's not only the head and shoulders target, it's also the target for this 1.618 extension here, third wave. Yeah, so the target for the third wave, the 1.618 extension target. Overall, things at the moment are going according to plan on the Solana chart, pretty much following the script. We need to become very careful and cautious, and long trading is going to become increasingly risky if the price breaks below $21.60, because then again the price is breaking below a level that would not considered reliable for a wave 4 in an unfolding impulse to the upside. So I will keep you updated. Don't think there is anything else to add here. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.